Welcome. I am the FX Savant, and today I got something a little different. Yes, I know we did the Trader Confessions. That's gonna be something I like to keep, but those are so short of a video. I want to keep you all with the content, keep the bangers coming, keep you all watching, keep you interested. So we're gonna do a little reaction video today. I'm gonna look at this YouTuber. I know he's watching. He commented on one of my early videos. Your boy, I'm sure a lot of y'all know him. Doyle Exchange. Seems like a cool guy. I ain't really watched too many of his videos. I mean, I've seen a couple, but posted a comment under one of my videos, so I'm gonna go ahead and return the favor, come back, give him some view time, watch some of his videos. I appreciate it. So that's what we're gonna do today. Let's see what we can find. Doyle Exchange. See what we got. 61 videos, 16K subscribers. Click on this first one. Let's watch this first one. Okay, before we get started, I'm gonna set you up. So let's get into it. A little 12-minute video. Let's see what we got.
What's good, YouTube? It's your boy Doyle back with another video. In today's video, I will be sharing a price action strategy that I use and I've had a lot of success trading it.
All right, first off the bat, what does this look like? It's looking like one of my recent videos, the head and shoulders pattern and how to take advantage of it. That video I put out, starting to look like that already. If you watched that video, bro, and you did your own, I appreciate it. It means I guess my video was pretty nice.
This video was inspired
right after I post mine, bro.
Reviewing my trades. I went all the way back a year from now and I saw a pattern. I saw that when I trade this pattern alone, I have made a lot of money from it. I will show a couple of screenshots of the results that I've got just strictly trading this pattern, and yeah, it speaks for itself.
All right, first off, I mean, he's gonna show the trades where he traded the pattern, but all we see is the trades. We don't know if he traded that pattern or not. I don't know.
What's up?
Nice profits though.
You guys are not aware of this, but I do trade institutionally, and I only trade with the banks. I trade price action. And
first off, institutions don't trade price action. There's that.
That's trade. Well, people that got my course, y'all already know this, but I just want to just bring this to YouTube because I think some of y'all still think I trade retail and I do not. But
some people think you trade retail, but you do not. I mean, you shouldn't have to explain it. We're gonna keep going. We only a minute in.
Yeah, let's just go straight into the strategy. The pattern. Okay, this pattern is an inverted head and shoulders. Now, I have made more money with inverted head and shoulders than regular head and shoulders. I don't know why. That's just the data that I have, okay? So the inverted head and shoulders is...
Oh, wait. I gotta stop it, huh?
It's basically...
I'm not supposed to be hearing this out loud for you, bro. It's fucking up the audio, ain't it? Damn. And I'll put some headphones and start. Stop the cap! Boy, stop the cap. So I only trade institutionally with the banks. Institutional traders don't open multiple positions, not at the same place on one pair. They don't stack in one area. We'll open one position in an area, and if we're gonna enter into the same market, we'll put another position on. But I don't do buy and get a position. No about no institutional traders, nah.
Trade price action, and that's...
Hold on. Let me go back.
I'm not aware of this, but I do trade institutionally, and I only trade with the banks. I trade price action, and that's all I trade. Well, people that got my...
I'm not trying to bash you, but from someone who knows the market, stuff ain't adding up, bro. You trade institutionally with the banks. You stack positions, though, and you only trade price action, or you're a price action trader. Institutional traders don't trade price action. Price action is manipulated by your broker. Each broker has different price action, the same pair. It depends on where they're located. So me and you could both be looking at Euro USD, but it depends on our broker to see how the candlesticks are formed. Different closes at different times, different 4-hour closes, different daily closes. Institutional traders don't trade price action. Let's just leave it at that. But I don't know, bro. We ain't starting too hot, 1:05 in.
Of course, y'all already know this, but I just want to just bring this to YouTube because I think some of y'all still think I trade retail and I do not.
Yeah.
But
off the first minute, I'm thinking you trade retail, but ain't nothing wrong with that. You just don't know.
Inverted head and shoulders. Now,
come holler at me.
I have made more money with inverted head and shoulders than regular head and shoulders. I don't know why. That's just the data that I have, okay? So the inverted head and shoulders is is basically a buy off of support, but you have two sharp moves. So this area up in here is a sharp move, and this area right here is a sharp move. And once it comes back to support, we buy once it starts breaking above candles, okay?
I think you watched my video. But you're explaining it wrong, bro. A sharp move and a sharp move, that's not institutional talk. I'm gonna keep saying and pointing out that fact that you said you're not a retail trader, you trade institutionally. People don't know, only people in your course know. If you have to go out and publicly tell someone and try to convince someone, then it's probably not true. And from a lot of this, from what I'm watching, I'm seeing that a lot of it's not true. A sharp move and a sharp move, that's not trading talk. That could be anything. If you have to clearly define it, watch my video. How do we define it? An impulse breaking structure. That would define what you're trying to do as a quick move. But I digress. Let's go back.
It's just a simple 3-step process. We spot a sharp move down, we spot a sharp move up, and it has to come back to support. It have to come back to support. I'm saying it again. It have to come back to support, okay? In certain situations that it doesn't, but when I looked at my screenshots of when I journal, majority of them actually came back to support. So this is, you need to really make sure it come back to support.
There we go, now we can see.
And once it comes back to support, we wait for candles to start breaking above, and we get in for the buy, and we have a tight stop loss, okay? So I'm gonna walk through maybe 4 or 5 setups.
Okay.
I'll show you exactly how it look.
I know, bro. I know you're not an institutional trader. I know you don't trade with the banks. You're a retail trader, which is cool. Ain't nothing wrong with that. You just don't have all the knowledge that you need. If you need some, holla at me. Really, honestly, contact me. Put you on game, bro. You know your way around the market, which is great, which is what I love to see when I'm teaching people. I just want to give you that little extra sauce. You right there. I know exactly where you are, but your definition of an inverted head and shoulder, if these are your 3 rules, it's not clearly defined, which is, you don't know, but retail traders don't have clearly defined rules, which is why their trades are sometimes discretionary.
Look and what to look for, okay?
Let's keep going.
Let's go. All right, so right here we on EUR USD to 5 minute. This price action strategy can work on any time frame, but the lower time frame, the better, because you'll see more of them. So just let that be known.
All right.
So we're on 5 minute chart.
All right. 3 minutes. He said the lower the time frames, the better, because you're going to see so much more of this pattern. That's not institutional talk. I'm not trying to bash you on that, but there's some people out here who actually know how to trade the markets in a clear, defined, rule-based setup, institutional way. I don't want to get that misconstrued with what I do or what you're saying, what you're teaching. It's not clearly defined rules. Lower time frames are the least respected. So the patterns wouldn't be that great on lower time frames. You ideally want to see them on higher time frames and take advantage of them on lower time frames. I don't know, bro. Watch your words. Watch your words. You know it's a ruthless,
and we have a sharp move down.
Market. Okay, let's see what he's calling a sharp move. Down.
We have our support already created.
I mean,
and once it broke above,
this is
right back.
This is a sharp move down.
Once it came right back, and it started breaking above, you don't have to get in right when it break above the candle. Give it some space. Okay, so you can get in maybe up in here, somewhere up in here. You can get in late sometimes, but make sure it's underneath.
You can't get in late sometimes. Institutional trader, we don't ever get in late. If we miss it, we miss it.
Or a regular 1-to-1, whichever one you choose, either the high or a regular 1-to-1. We never have a less than 1-to-1. We don't do that over here, okay? It have to be a 1-to-1, or we aim for a high and we get out, or if you want to leave a runner. But runners is not guaranteed. Don't expect for runners to always happen, but
you shouldn't have a runner. You should have clearly defined rules to take you out of the market,
or aim for the high. Okay, now remember, it's only for inverted head and shoulders, okay? Not the regular head and shoulders, inverted. Okay, so let's go to NAS 100. Y'all know I love this pair.
So his example wasn't,
this instrument.
That wasn't an inverted head and shoulders. Let's see.
Right. So again, it looked very similar.
This is his example.
Okay? Very simple.
This is not an inverted head and shoulders, bro. So you just have a false breakout. You have support being created, structure being created right here. You have the break below. You have the break back up. But here is your right shoulder. You're just creating your right shoulder right here. This would be your move up. Now, if you want to call this your right shoulder, it's not really the right shoulder because it's breaking below the left shoulder. It's closing below all these candles, even the wicks. Your right shoulder should not be closing below the left shoulder if you want to see the inverted head and shoulders. You're just spotting out false breakouts, bro. You're finding a level. You're seeing the false breakout and the false break or the real break back in. That's not technically inverted head and shoulders. That's like a rectangle is a square and a square isn't a rectangle or whatever it is. But you have to clearly define them. Go watch my video. I know you saw it because it's looking really similar to my video. You already dropped a comment early on, but just go back, rewatch my video some, because the rules in there or the things that I'm explaining is
very similar.
Really the way that it should be. The sharp move, we gotta get rid of that talk.
Sharp move up.
We gotta use the correct jargon.
Give it some wiggle room. Don't just hop in over here. Give it some wiggle room.
So here's what you're looking at. Now that you're talking about this right shoulder, the right shoulder is your inverted head and shoulders. So we have price breaking structure to the downside, creating lower lows and lower highs. Then we had structure created right here with this green candle, and then price broke below it with this red candle and closed below this structure that was all in here. Then what do we have? A price immediately come back into the zone, into the range, right back in here, retest the most recent resistance, come back, and then what do we see? The right shoulder over here failed to break below the left shoulder, which is further confirmation that we like to see this move up. And then what did we get? Now we had a strong impulse correction, impulse to the upside, impulse correction, impulse correction, impulse correction on the way up. Here's your head and shoulders right here. This whole right shoulder that you're pointing at is your head and shoulders. Break below, come back, retrace, break below, come back into the area, not respecting the structure. Don't break below the left shoulder. Then we start to see the move up. Go watch my video again, bro.
Maybe up in here or something. Up in here, and then get your regular 1-to-1.
1-to-1.
And then we have highs over here. You could have aimed for this high.
Bro, I
wouldn't try to aim for this.
Ain't no institutional trader shooting for no 1-to-1s.
This high was too close, and that was going to be a less than 1-to-1. So no. You know, we're not about to do no less than 1-to-1.
You can't do less than 1-to-1.
This high could have been aimed for, or you could have just did the regular 1-to-1. Up to you.
I ain't gonna knock no 1-to-1s.
It's just very simple. They all look very similar.
I'm not gonna take what I risk as my profit.
Support have to be already created. Okay?
I'm gonna need a little more.
Here, support was already created up in here. So once it came back, it was just an easy trigger.
And then we broke and closed below support over here.
Yeah, it's just a beautiful setup. Let's just keep going. Okay. Now, look at this setup. Okay.
Okay. This is not a setup, bro. This is not an inverted head and shoulders. Go watch the video again. The rules are clearly defined. What an inverted head and shoulder really is, what a regular head and shoulder really is. Don't just take the idea and run with it, because this is not good information. There is no right shoulder. This is your inverted head and shoulders down here. Your left shoulder being created, break below the left shoulder, immediately come back into the range. You would be looking for something over in here. Hopefully it doesn't break below the left shoulder, and then you start to see the move up. We didn't get that. You won't take the trade. It's not an inverted head and shoulders. This is a clear defined rules that I have as a trader. It's not up for discussion. Institutional traders, bank traders, traders who have knowledge. I'm not saying I'm an institutional trader. I'm not saying that I'm a bank trader. Oops. I'm breaking stuff. I understand the markets, and I know that the way that you're explaining, the way that you see this pattern is retail traders with a lot of discretion. There could be something slightly different that can change your mind and make you take this trade one day, and this exact same setup, same candle, same everything, make you not take the trade the next day. That's not institutional trading. That's not really trading. That's gambling. So until you have these clearly defined rules, I wouldn't even be trading this pattern until you figure out the rules, clearly defined rules for yourself, because you told us 3 different scenarios where all 3 of the rules that you laid out applied, but you just cherry pick the results. I mean, it's easy to go back and see the trades that I'm doing, that I'm showing, are trades that I've taken and actually used the pattern. I don't see any evidence that you took these trades or saw these trades. These are just examples you pulled out of the book, cherry picking to explain something, a concept that you don't really have a good grasp on. And I'm not trying to knock you, bro, because it is hard to come out here on YouTube and obviously receive criticism like I'm giving you. But contact me, bro. Get in touch with me. I ain't trying to just sit here and bash you, but contact me seriously. I'll give you some knowledge, and then you can go out here and give out good, accurate information. Right now, I don't want someone to try to take your advice and then come to you and they're talking about, hey, you said this works and it ain't working for me. I'm following the rules you said. It's a whole headache. But let's see what else
It came
let's
back.
keep it going.
Did it touch the zone? No.
No,
But
I didn't touch the zone.
look how close it is. It's literally like less than a pip. That's okay. That's literally okay. So once it started breaking above, we get in. We instantly get in. Stop losses underneath.
I just have to. This is not a inverted head and shoulders. It's not a head and shoulders. I mean, it's your starting point, break structure, create structure, and then we came all the way up here, broke above, closed above, all the structure. Can't be your right shoulder. Your left shoulder is here. We're not going to make a move all the way to the upside, then come back and retrace and come test this and this be your. This ain't it, bro. This ain't it. There's too many red flags, and I don't know, bro. This ain't it.
Underneath these candles or underneath the zone, whichever one you feel comfortable with, okay? Because having a super tight stop loss is good with indices, but sometimes you want to give it room. So you gotta eyeball it. So I'll say maybe up here. You don't have to get in exactly perfectly.
Your stop loss should be clearly defined as well.
And
it shouldn't be a tight stop loss, a wide stop loss.
The stop loss.
Your stop loss has to go where your stop loss has to go for a reason.
Okay, we could do it like that, or we can aim for this high over here. But this high right here, that's gonna take a very long time. So you gotta have some patience because you was up and then it came back. So it's really up to you.
Should have been break even if you were in that trade.
This high right here.
You got stopped out break even.
But we probably got stopped out at break even once it came back and pulled back. Okay. But you see, support was already created. Sharp move down.
All right, I'm gonna stop it here at 707. Can we please stop just showing cherry-picked ideas on the chart? Give us some sort of, hey, I saw this, I called it out beforehand, and here's what happened, the result after, and then apply it like this. Because if we're just looking at it, you didn't take this trade. You're saying, hey, we can just leave it at a 1-to-1 or shoot for this target, but this is after the fact. So now that you've seen that price went and retested some area or went to some area, you can say, yeah, we could have taken a trade here and took profits from 2-to-1, or we can go for a 1-to-1 because you're seeing it on screen. Obviously I do it. That's the reason why I do it. So no one can say this about me, but I show you the trade time that it was sent before, what it looked like. And then I show you the result afterwards because it's really me. It's true. It's really, I do this. I does this. I know this, but right now I mess with you. I really like your channel and I like that you're a content creator in the trading space, but I don't want you to give out false information. There's a lot of that. And I'm here to kind of clear that up and give out the accurate, right information about the Forex market, any market in general. Don't matter, crypto, indices, commodities, Forex. Everything I know works in all of them because it applies to the market.
Sharp move. Let me grab it. Sharp move down, sharp move up, and then it comes back, okay?
Bro, that ain't it.
We have to be patient with this pattern because we don't know how long it's going to take for it to come back to that zone, okay?
This is just turning out to be a video about me bashing.
I'm counting that as a.
And I ain't trying to come off like that. I really want you to get the right education.
Right there.
I'm gonna stop it there at 7:30. I want you to have the right information. Plus, you black like me, why not? Get in contact with me. If you watching this video, go tell Doyle to holler at me. Doyle, if you watch this video, holler at me. Really, honestly, truly, bro. Video ideas where I teach you what I know. And we got more content. And you're profiting because I'm teaching you what I know. The results speak for themselves on my channel, and in the group, in the signals. But just holler at me, bro. I'm gonna get you right. Cause I don't want to keep bashing. It's just making me mad the more and more I watch. Because it's like counterintuitive. You said I only trade institutional banks, but I trade candlesticks. But I call moves in the market sharp moves. But I shoot for 1-to-1s all the time. But my stop loss doesn't go in the same spot every single time. A lot of the trades are discretionary. It's just, I don't know. I'm getting mad because I don't even want. I'm just getting mad.
Right there.
Let's play a little more.
Next example.
Oh, you got another example?
Okay. All right, so we have a sharp move down. Support is already created.
Here's your head and shoulders right here. The left shoulder, right shoulder. Here's your break of structure. Structure right in here. We broke structure to the downside, immediately come back into the range. Then from there, we come retest the left shoulder. We do not break and close below the left shoulder. Then the right shoulder continues to move upwards and we have bull pressure. So if you're going to say that this is your right shoulder, I could give you that. This structure here, we broke below, come back immediately into the area, and then we come retest it and break below the left shoulder. But this might be the only one out of the three that you've shown that could be. But here's your head and shoulders, your inverted head and shoulders in here.
Sharp move down.
I'll take this one.
Sharp move back up.
I'll accept this one.
And then it comes right back to it. See how those two red candles came right back to that support? We'll be buying once it starts breaking above candles. We can buy up here. We can, let's say we want to buy above that red candle.
Why?
This one right here. This candle right here. We want.
All right, I got this is definitely not no institutional trading. What's the most easiest rule about the market everyone knows? You want to sell where and buy where. Ain't no way we getting ready to be buying at the highs. What? Ain't no bank trader, retail, ain't no institutional trader buying at the highs, bro. You want to buy at the lows. Matter of fact, we're buying at support for a reason. That's the reason why my entries were here in this area. I can't give it away for free all on this video, but there's a reason why you're buying at the lows and not at the highs.
Buy once it breaks above that candle. Okay. Our stop loss will be underneath the zone. And we get our 101.
Stop loss underneath the zone.
High is less than 101, so no. So we have this high that we can use
1-to-1,
and we get it. Okay, it's a beautiful setup. Let's go to gold, I believe. Yeah, gold. Yeah, let's go.
Big ups, my dude.
I think this is the last example, but this pattern is very profitable, like very profitable. All right, so
this was a failed pattern, bro.
It's the same thing. We gotta look for support. And
we had candles breaking below the left shoulder. You can't, this isn't an inverted head and shoulders, bro. You're just showing false breakouts, which can be, you could take advantage of those in themselves because of what it is. It's a false breakout, especially if you wait for the candles to come back into the range. You have all these traders trapped for sales. But this is not an inverted head and shoulders, bro. This is your left shoulder. I mean, it is, but this is a failed inverted head and shoulders, not what you're showing. Here's the real inverted head and shoulders. We had structure created right here. We broke below structure, immediately came back into the range. We retested the left shoulder immediately. It's not over here. That's one thing too. Retail traders are late. When you trade the market and you actually know what you're doing, not saying I'm an institutional trader, but institutional traders and bank traders into the market before the moves even happen, before the retail traders can see the moves. So if you're getting in over here, that's further reasoning as to why you're explaining things in a retail way. Not saying that you are a retail trader, but it's not adding up. The way that you're speaking about the market, the words that you use, your definitions, your entries do not add up to institutional trade level, but I can help you get there. I definitely, and I don't mind to, I definitely would, and I definitely can. But here's your inverted head and shoulders. You had your break below structure, come back into structure, and then we retest the left shoulder without breaking and closing below the left shoulder. So we have these wicks. We didn't break and close below the wicks. Price continued up, but after this move failed, then the pattern failed. As you can see, price started to get up here, then we rolled over, which is, we don't want to be in a trade through all this. We want to be in these type of trades, this impulse to the upside, this impulse to the downside. We want to take advantage of this correction. So holla at me, bro, because
and we have to get two sharp moves.
This is your
down and up
sharp move.
So we have sharp move down, this impulse move. Then we have sharp move up. You see all these big green candles right here?
Impulse word.
Sharp move up comes literally right back to that zone. And once you start breaking above, we're getting in for the buy.
This move up is not part of this move up.
So
you had your retracement back here.
We'll be getting in for the buy right here. Stop loss is literally up underneath these candles. Since it's already broke through the zone, we're just gonna have our stop loss underneath these candles.
Left shoulder.
If it breaks through the zone and then it goes back above, our stop loss is underneath those candles. It's not gonna be beneath the zone.
Favorable risk to
because that don't make sense.
You see, since he said the candles already broke through, now we can move our stop loss below the candles. You have to define that in the beginning. So if someone was trading this, they had been taking all these trades, and then they just now got to this part in the video and saw that, oh, what he's saying that his rules, you can add this into the rule. It's not good. It's not clearly defined. It needs to be clearly defined and simple to where it's black and white. Either you're doing it or you're not. Or you have your stop loss in the right position, yes or no. Not you're late. This entry over here is late. We're buying at the highs. I'll give you this. I'll give you this entry. It's not necessarily the highs, but you would want to get in at the lows. Why not get in somewhere in here? Your stop loss down here. Now you're entered in here and you have this room to go.
If you break through the zone and then it goes back above, our stop loss is underneath those candles. It's not going to be beneath the zone, okay? Because that don't make sense. So we're going to have stop loss up under here. 1-to-1. Our 1-to-1 is less. It's less than 1-to-1 at this high. So we don't do that. So we need at least a 1-to-1, and that's right here. But the next high is up here. So if you wanted to aim for that high, let's see, did you get it? Yeah, I think you got it. Yeah, you got it right up in here. Yeah.
I want to see the trades you did. I want to see your trade. You showed all these screenshots of trades you took over the last year. Why are you showing us some stuff that we could do? Let me see the ones you did where you was like, hey, I could take my take profit here, but it's not giving me the favorable risk to reward I want. I move my take profit to this level because of da-da-da-da-da-da. Now explain it to us because now we know that you did it. Don't tell me what to do, bro. I want to see you do it.
It's very textbook. It's very textbook, and majority of the time, the profitable trades are going to look very textbook. It's going to look very clean. You're not going to question it, okay? I love this. I love inverted head and shoulders. I absolutely love it. I don't know why, but they have more success. Well, I have had more success with inverted head and shoulders than regular head and shoulders.
It's because your rules aren't defined.
I do trade this during New York session. If you see that I have this indicator for our sessions, this is 9:30 to 12 to noon.
All right,
this is the time I look for setups. This is the time that I trade personally. But again, this is the 5-minute chart, so you can see inverted head and shoulders. London session, you can see that any time of the day. It just depends on what pair it is. But yeah, this is a strategy that
you didn't tell us the strat.
That I have had a lot of success with a year ago. Like I've been trading this for a very long time.
Strat's a 1-to-1.
It's have a lot of good results. So I hope that y'all can implement this into y'all system, whatever y'all using. And yeah, we just get to the money, man.
I ain't wrapping it up. So, Doyle, holla at me. Pointed out some of the mistakes. I know it's tough being a content creator, but at least get all the information before you start talking on it and coming out here and talking to the public. It's billions and billions of people who could potentially watch this video, and you don't want to give them the wrong information. From my end, you see, I pointed out some of the things that were flawed. I'm not trying to just get on here and bash you, Doyle. I would love to connect, do like a follow-up video. We could talk about it, do something, but we have to stop being furus. I mean, I didn't want to say it, but that's how it comes out. You showed us a bunch of cherry pick setups of trades that you didn't take. The rules weren't defined very well. And you just throw it out there and say you made $4,000 off this one strategy, a price action strategy at that. I wouldn't even put price action in front of it. That's a big no-no. I already know from that it's not a profitable strategy. I got to get on here and tell the truth. This is not institutional trading. This is retail trading, Doyle. And everyone that views it, this is retail trading. But all you have to do is take the time to learn. If you made $4,000 trading this, take that, invest it. $4,000 will buy you enough Forex knowledge, will buy you enough knowledge to be able to trade these markets like an institutional trader, like you say you do. And you'll be able to show it instead of sharp moves. But Doyle, holla at me, I'll get you right. But other than that, man, I enjoy these reactionary videos. Drop your boy a like, subscribe, make sure the post notifications are on. If you did learn something still, that's always a plus. And I hope you have a positive day on and off the charts. Till the next time, I'll holla at you.